One number explains why XRP is moving to absorb a $19 trillion market. That number is two business days. That is how long the global financial system stays frozen every time a government bond moves. It's slow, it's expensive, and as of this morning in Seoul, it is officially obsolete. Ripple just compressed 48 hours into near real-time execution. While you were watching the price move sideways, the infrastructure of the world's third-largest insurer just moved onto the XRP Ledger. This isn't just another partnership. This is a structural takeover. Here is why. Kyobo isn't just an insurer. They are one of the world's largest buyers of government debt. They collect premiums today to pay claims 30 years from now. That forces them to hold massive multi-billion-dollar bond positions. Until today, that capital was trapped in a 40-year-old settlement system. Now, it runs on Ripple custody. The pilot covers two things: real-time bond settlement and stablecoin payment rails. Bonds and payments, the full stack. This is the first Ripple in a $19 trillion ocean. Words are cheap. Let me show you the receipts. Pay attention to these next three data points. They explain the setup. 1. Ripple's Korean footprint did not start today. In February 2025, Ripple partnered with Korean custodian BDACS for institutional storage of XRP and the RLUSD stablecoin, the dollar-pegged token Ripple issues, designed to move value between traditional banks and crypto rails without price volatility. That deal opened the institutional door. Kyobo walked through it. 2. South Korea has licensed payment providers for cross-border remittance since 2017. The regulator has rules. Ripple is plugging into existing law, not lobbying for new law. 3. SBI Ripple Asia, the joint venture between Japan's SBI Holdings and Ripple Doors, partnered earlier this year with a firm called DSRV to study direct XRP Ledger remittance between Japan and South Korea. That corridor currently runs through correspondent banking, slow, expensive, intermediated. Ripple is dismantling it piece by piece. Here's what jumped out at me when I went through the on-chain data this morning. XRP exchange reserves in October 2025 sat at 3.76 billion tokens. As of this week, that number is 1.66 billion. A 57% decline in under 6 months. More than 2 billion XRP have left exchanges and moved into private wallets, custody platforms, and cold storage. And here's the part that should make every holder pause for a second. Whale wallets, the addresses holding more than 1 million XRP each, added tokens at a 30-day average pace of 11 million XRP per day as of April 6th. That is a 10-month accumulation high. At current prices, 11 million XRP per day equals roughly $14.5 million in daily buying. On March 10th, a single-day outflow event moved $738 million worth of XRP off exchanges into private custody. That same day, the Crypto Fear and Greed Index sat at the lowest reading in 24 months. In the 7 days ending April 7th, exchange-traded products holding XRP, funds institutional investors use to buy XRP through a normal brokerage account, pulled in $120 million in net inflows. That single weekly figure was 53% of all global crypto product inflows. Not Bitcoin, not Ethereum. XRP captured more than half of every dollar that entered crypto products that week. Cumulative US XRP ETF inflows since launch are now above $1.3 billion. On April 12th, 3 days ago, XRP ETFs added another $3.3 million net, while Bitcoin ETFs lost $159 million and Ethereum ETFs lost $64 million. Let me pull back for a second. Here is what all of that means in plain English. While the price has moved sideways for a month, institutional asset managers, whale wallets, and ETF custodians have been buying XRP at the most aggressive pace in 10 months. Retail panic and institutional accumulation are happening in the same market, in opposite directions. Now, before you screenshot those numbers and share them, you need to see what comes next. Now, this is the part most channels will not tell you because it complicates the narrative. The Kyobo deal is a pilot, not a production system. The press release uses precise language. Ripple and Kyobo will, quote, assess the technical and regulatory feasibility of tokenized treasury settlement. That is proof of concept language, not launch language. Pilots take 12 to 24 months to scale. Second, the token did not move on this news. XRP traded between $1.32 and $1.36 today. 24-hour change, less than 0.5%. That has been the response to every Ripple partnership announcement for 4 straight months. Stop. Rewind everything I just said because there is a force powerful enough to override all of it. April 12th. Peace talks between the United States and Iran collapsed in Islamabad after 21 hours of negotiation. Vice President Vance led the U.S. delegation. Iran was represented by Parliament Speaker Ghalibaf and Foreign Minister Araghchi. The two sides agreed on most points of Iran's 10-point ceasefire plan, but failed on two issues: Iran's nuclear program and control of the Strait of Hormuz, the shipping channel that carries roughly 20% of the world's seaborne oil. April 13th, President Trump ordered a U.S. Navy blockade of Iranian ports. Brent crude jumped 7% to $102 per barrel. WTI, West Texas Intermediate, the U.S. oil benchmark, climbed 7.8% to $104. U.S. gasoline now averages $4.13 per gallon. These numbers are the reason I can't go full bull today. The current ceasefire expires on April 22nd, 7 days from now. No extension is being negotiated publicly. The original 2-week window was supposed to produce a longer agreement. Instead, it produced the failed Islamabad talks and a U.S. naval blockade. Let me take you 30,000 feet up because from up there, the picture changes completely. Oil over $100 repriced every risk asset on Earth lower. Capital rotates out of speculative positions and into cash, gold, and the dollar. XRP is in the same risk bucket as the S&P 500 for this purpose. The Federal Reserve, the institution that sets interest rates in the United States, meets April 28th and 29th. The current Fed funds rate is 3.5 to 3.75%. Higher oil means higher inflation. Higher inflation forces the Fed to hold rates longer. Higher rates pull capital out of XRP. Here is the picture. Korea's third largest life insurer put government bonds on the XRP Ledger this morning. Whale wallets are at a 10-month accumulation high. Exchange reserves are at a 6-month low. ETP inflows captured 53% of all crypto product flows last week. Clarity Act passage odds on Polymarket sit at 72%, up from 60% 1 week ago. JP Morgan called the bill a positive trigger for digital assets. Ripple CEO Brad Garlinghouse put end-of-April passage odds at 80 to 90%. All of this is real, and XRP trades at $1.32. Fundamentals set the destination, macro sets the timing. Now to the on-chain side underneath the price. The XRP Ledger has crossed 200,000 active addresses. Total wallet count stands at 7.7 million. Both metrics grew through the 6-month price decline. Here's the data point that keeps me from going full bull right now. Approximately 60% of circulating XRP supply, more than 36 billion tokens, is currently held above the market price. 6 out of every 10 XRP tokens in existence sit at an unrealized loss. That overhead becomes sell pressure every time the price approaches break-even zones. XRP has to run a gauntlet, 3 levels, each thicker than the last. Wall 1, $1.45 to $1.50, the cost basis for roughly 60% of circulating supply. Wall 2, $1.60, the level that has rejected every rally attempt for 2.5 months. Wall 3, above $2, where institutional sellers from the late 2025 rally still hold unfilled exit orders. On the supply side, moving the other way, Ripple unlocks roughly 1 billion XRP from escrow each month and relocks the majority back into multi-year contracts. The portion sold into open market is a small fraction of unlocks. Net new sellable supply is shrinking. Combined with the 2 billion XRP pulled off exchanges, structural supply available for sale is at multi-year lows. The price refuses to break out anyway. The reason is named macro oil at $104, a Fed that cannot cut, a war that just escalated. All right, you have the map. Now let me show you the 4 checkpoints. Here's where we turn analysis into action. 4 signals. That's all you need. Signal 1, Iran ceasefire deadline, April 22nd, 7 days from now. Extension means oil drops, risk assets relief rally. Expiration plus blockade escalation means oil through $110 and risk assets get hit. Watch for any joint statement out of Washington or Tehran. Signal 2, clarity, act markup in the Senate Banking Committee. The bill needs to clear committee before May or midterm politics. Shelve it for the rest of 2026. A scheduled markup date alone moves the price before any vote. Poly market currently at 72% for passage. The poly market number tends to move ahead of news, not after. Signal 3. Price level $1.45, daily close above on real volume, confirms institutional accumulation is absorbing retail overhang. Below $1.28, next material support is $1.11. Signal 4, FOMC meeting, April 28th and 29th. Rate cut at this meeting is essentially zero. The variable is Chair Powell's language. Openness to cuts later in the year despite oil, risk assets up. Extended pause language, risk assets stall. The press conference matters more than the rate decision. Bullish scenario. Iran ceasefire extends. Oil drops below 90. Clarity. Act markup gets scheduled. Fed signals flexibility. In that combination, Standard Chartered's Jeff Kendrick, head of digital asset research at the bank, has a near-term target of $2.80. His 2028 target is $12.60. Kendrick's reasoning, regulatory clarity could push cumulative US ETF inflows from $1.3 billion to between $4 and $8 billion by year-end. Bearish scenario, ceasefire expires. Oil pushes above 110. Clarity, markup misses April. Fed extends pause. Support at $1.28 breaks. Next support, $1.11. Below that, the chart is unsupported until 80 cents. You don't need to guess. You just need to watch these signals. So let me bring this all together. Today, Korea's third largest life insurer chose the XRP Ledger as the rail for the country's first tokenized government bond pilot. The price moved less than 0.5% in response. Underneath the price, exchange reserves are at a 6-month low, whale accumulation at a 10-month high, ETP inflows at 53% of all global crypto product flows last week. Supply is structurally tightening. Demand is structurally growing. Macro is the only variable holding the price down. I'll be covering every development. The April 22nd Iran ceasefire deadline, the Clarity Act markup window, the FOMC meeting on April 28th, every single day on this channel. Tomorrow, the SEC holds its public roundtable in Washington. Official agenda, options market structure. Speakers include Commissioner Hester Pierce, Commissioner Mark Uyeda, and Jamie Selway, the same commissioners driving the SEC's entire digital asset agenda. I will have the timing, the names, and what to actually watch for. Don't miss it. You now have the framework. The signals will do the rest. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Until next time, stay sharp, stay informed.